Force number 3. The macro environment is shifting in Bitcoin's favor in ways that are only just beginning to be understood. Let me give you the most concrete, most current example of what I mean by that. On February 27, 2026, U.S. and Israeli forces conducted a coordinated military operation against Iran's nuclear sites. Within hours, geopolitical risk was at its highest level since the 2003 invasion of Iraq. Oil prices surged as Iran threatened to close the Strait of Hormuz. Global markets went into panic mode. And here's what happened next. And this is one of the most extraordinary things to happen in financial markets in years. Every stock exchange on the planet was closed. It was a weekend. The New York Stock Exchange closed. The NASDAQ closed. London, Tokyo, Frankfurt, Hong Kong, all dark. Institutional investors who wanted to move their capital, reduce their risk, or reposition could not touch a single traditional financial market. But Bitcoin was open. 24 hours a day, 7 days a week, no exceptions, no holidays, no governments that could flip a switch and shut it down. And what happened? Bitcoin initially dropped as leveraged traders got liquidated. But within days, something remarkable emerged from the data. Bitcoin did not just recover. Bitcoin outperformed. Gold, the 5,000-year-old safe haven that every institution reaches for in a crisis, fell roughly 2% in the days after the conflict began. The S&P 500 dropped. Oil spiked. And Bitcoin? Bitcoin climbed roughly 12%. As of right now, March 14th, 2026, Bitcoin is trading at approximately $71,000, holding firmly above its pre-war level, up about 8% so far this month alone, after 5 consecutive months of losses. And that performance is not being reported clearly by mainstream financial media, but every institutional analyst watching this has logged it. Hit like on this video right now if you find it remarkable that Bitcoin is outperforming stocks and nearly matching gold performance since the Middle East war began. Because I genuinely think most people watching this have not connected those dots yet. And connecting them is the entire point of this channel. But here is what they're not telling you about why Bitcoin behaved the way it did during the crisis. And this is something that central banks and sovereign wealth funds are discussing in private conversations right now. The conflict did not just test Bitcoin's price, it tested Bitcoin's utility. It proved in real time in front of every financial institution on Earth that Bitcoin is the only fully functional, globally accessible, censorship-resistant financial network that operates 24 hours a day, regardless of geopolitical conditions. You cannot sanction Bitcoin. You cannot freeze Bitcoin. You cannot close a Bitcoin exchange for a bank holiday. And when the largest geopolitical event in 20 years hit on a weekend, and every traditional market was dark, Bitcoin was the only place in the world where price discovery could happen. That is a proof of concept moment that institutional investors do not forget. And the capital flows we are now seeing in March 2026, nearly 700 million in fresh US Bitcoin ETF inflows just this month, are, at least in part, the result of institutions drawing exactly that conclusion. You need to understand this before I show you what is next. We are not just watching a price chart. We are watching a fundamental re-rating of what Bitcoin is, not just an investment, not just a speculation, but a sovereign-grade financial network with unique properties that no other asset in the world shares. And the people who see that reclassification happening before it becomes consensus, those are the people on the right side of this trade.